Welcome to this case study on Untapped Global, Financing Africa's Missing Middle, brought to you as part of the Skilled MBA Case Study Series. This session explores how Untapped Global is addressing the $5.2 trillion global SME funding gap by providing innovative financing solutions for small and medium enterprises, SMEs, across Africa. We will examine their approach, key challenges, and strategic recommendations for scaling impact. A critical financing gap exists for SMEs in emerging markets. Across the globe, small businesses struggle to access the capital needed to grow, with an estimated $5.2 trillion funding shortfall. Untapped Global is working to bridge this gap by providing data-driven, asset-backed financing solutions. Currently, the company operates in 15 African countries, working with digital lenders and investors to enable SME expansion. Untapped Global's model consists of four key components. First, capital raising, securing funding from limited partners, LPs, and venture capitalists, VCs. Second, partnering with digital lenders across Africa to distribute financing efficiently. Third, using a revenue-based financing model with real-time tracking of repayments, ensuring transparency. And finally, facilitating SME growth by providing flexible financing that adapts to business performance. Several key stakeholders play a role in Untapped's success. Founder and CEO Jim Chu leads the company's strategic vision. Internal teams balance investor expectations with execution. Digital lenders serve as critical partners in delivering financing. SMEs are the primary beneficiaries, using the capital to scale operations. Investors, including LPs and VCs, provide the funding that drives Untapped's mission. Untapped Global utilizes revenue-based financing, RBF, a flexible funding approach that scales with business performance. Payments fluctuate based on revenue, reducing risk during slow periods. Real-time tracking enables data-driven decision-making and transparency. Loans are asset-backed, reducing default risk for lenders. This model ensures that financing remains sustainable and accessible for SMEs. Untapped operates as both a FinTech startup and an investment fund, creating a complex dual identity. As a FinTech company, it follows a venture-backed growth model, emphasizing scalability, technology, and disruption. As an investment fund, it manages LP capital with a focus on risk management, portfolio diversification, and financial returns. This dual structure presents operational and strategic challenges. Untapped Global has several strengths, including its innovative RBF model and real-time tracking capabilities. However, the company also faces internal misalignment due to conflicting strategic priorities between its FinTech and investment fund operations. Finding a way to balance these two models is critical for long-term success. Significant opportunities exist for Untapped to scale across other developing regions, leveraging its proven model. However, threats such as currency risks and limited investor exit options could slow expansion. Managing these risks while capitalizing on growth opportunities will determine Untapped's trajectory. One potential solution is to separate Untapped's FinTech and investment fund operations into distinct entities. This would allow each unit to pursue its core mission independently, attract targeted investors, and operate with greater strategic clarity. However, this approach would increase costs due to duplicated infrastructure and may reduce synergy between technology and financing. A second option is to prioritize the FinTech platform, focusing on technology development and scalable growth. This strategy appeals to venture investors looking for disruptive innovation. Key advantages include enhanced data analytics, AI-driven decision-making, and streamlined financing through digital channels. However, This approach may limit access to traditional LP investors who prefer fund-driven models. A third approach is to refine the dual structure while improving governance and alignment. This solution involves governance reforms, ensuring clear separation of responsibilities between the FinTech and fund teams. Compensation structures can be aligned to reward collaboration across both units. Unified messaging would present a consistent narrative to all stakeholders, while integrated metrics would balance growth, impact, and returns. Each alternative presents different strengths and challenges. A separate entities approach provides clear operational focus, but risks losing synergy. A FinTech-first model maximizes scalability, but may not appeal to all investors. An enhanced dual structure balances strategic alignment, scalability, and investor appeal, making it the most viable long-term solution. Untapped's financing model is making a tangible impact across Africa. By enabling diverse entrepreneurs, from market vendors to tech startups, to access growth capital, the company is driving inclusive economic development. With the right structural model, this impact can be significantly scaled to reach even more SMEs in emerging markets. 4 key strategic actions are recommended. First, conduct a comprehensive strategic review to clarify organizational identity. Second, streamline operations by assigning clear leadership accountability between the fund and FinTech teams. Third, develop a strong investor engagement strategy to articulate the advantages of the hybrid model. Lastly, enhance technology investments in AI and data analytics to improve scalability and risk management. Untapped Global's journey highlights key lessons for impact-driven enterprises. Mission structure alignment is crucial. Organizational design must support long-term goals. Transparent stakeholder communication builds trust and confidence. An adaptive strategy allows businesses to evolve while maintaining impact. Finally, balanced metrics ensure that both financial and social returns are effectively measured. By resolving its identity challenge, Untapped Global can strengthen its market position and maximize impact. Enhanced data capabilities will drive better risk assessment and unlock new financing opportunities. With the right structural adjustments, Untapped can expand its innovative financing model, empowering SMEs and driving sustainable economic growth across Africa. Thank you for exploring Untapped Global, Financing Africa's Missing Middle, brought to you as part of the Skilled MBA Case Study Series. This case study highlights the intersection of FinTech innovation and impact investing, offering valuable insights into scaling sustainable business models.